Hello, thank you for joining us today. I'm going to be doing a short presentation today on Canadian international tax and covering topics on tax considerations relating to relocating to Canada and departing from Canada. Trowbridge, let me tell you a little bit about ourselves. Our firm is called Trowbridge, and we provide international tax services for Canadians worldwide and provide consulting and tax return preparation. We have offices in Toronto, London, UK, Montreal, and Vancouver, and we're an independent member firm of a group called the Global Tax Network. So we can provide international tax services for anyone coming to Canada or going abroad, as well as pretty much anyone going from one country to another through our worldwide network. I'm going to first cover the topics on tax considerations relating to relocating to Canada. Now, there's two different scenarios that could occur if you come to Canada as either a resident or a non-resident. So if you arrive in Canada and are here in Canada on a short-term assignment or a short-term move, you're likely seen as a non-resident, and you would file in both Canada and the foreign country that you've come from. If you come to Canada on a permanent move, that means that you've likely established residency for tax purposes, and you would then be subject to tax in Canada on worldwide income. Now, when we look at whether an individual is a resident or not, we determine whether they're a resident for tax purposes. And by doing that, we look at whether either it's a former Canadian or a non-Canadian, whether they've established residential ties, and it has nothing to do with whether an individual is a legal citizen or not. Now, how do you establish residential ties? What we do is we look at different sorts of assets and ties that you have to Canada. And when you then become a tax resident, we file what we call an arrival tax return, otherwise known as a part-year resident return, indicating to the Canada Revenue Agency that you become a tax resident. Now, what establishes residency is based on a whole gamut of ties, and we look at two categories. We first look at primary ties, and we also look at secondary ties. Primary ties are things like having a home in Canada, a dependent spouse or children in Canada. Secondary ties are things like having personal property left in Canada, bank accounts, credit cards, provincial Medicare, driver's license. So this whole group of secondary ties is looked at to determine whether an individual is a resident or not in conjunction with these primary ties. Any one primary tie can cause you to be seen as a resident. So again, having a home, dependent children and spouse in Canada, all of these will be contributing factors. Now, what are some of the things you have to look at when you do arrive as a tax resident? When we look at the tax filing, we determine things like deemed acquisition values on foreign assets. We look at foreign reporting requirements for these assets that you're holding abroad. And it's always important to be aware that from your arrival date forward, you're taxed on income, on your worldwide income from all sources. Now, treaties do come into play where we have to look at whether the country that you're coming from has a tax treaty with Canada. And if they do, we then determine where you're more of a resident under both countries' domestic law. Now, the benefit of a treaty is that you would only be seen as a resident of one of the two countries at the same time if you're seen as a resident of both countries under their domestic law. So if an individual comes to Canada from a foreign country, we evaluate where they're seen as more of a resident, and one of the two countries sees them as a resident, and the other would then see them as a non-resident. Now, what if an individual is a tax resident and they then depart to go and live and work in another country? We then have to determine whether that individual severed residency for tax purposes. And again, we look at these primary and secondary ties to determine whether an individual has now become a resident of another country. And assuming they do, we would then file what we call departure tax returns. Now, there's a whole range of issues that arise in a return that when an individual becomes a non-resident. One of them is a concept known as deemed dispositions to determine whether there's any departure tax on leaving Canada. Another large area of concern is the principal rents exemption. So if an individual sells or rents that property and becomes a non-resident, they've severed that tie, and then we then look into the non-resident withholding and reporting requirements around that property. Now, what if an individual is a non-resident and they're working in Canada? It's important to know that you have to file as a non-resident of Canada on any Canadian source employment income. And under that assumption, you then still maintain primary ties abroad. So you would always then still be subject to tax on any Canadian source income, but not on income earned in the foreign country if an individual is seen as a non-resident of Canada for tax purposes. If an individual comes to Canada to work or consult here, it's still very important that they still file a tax return, so there is a filing requirement, and self-employed individuals are generally subject to tax in Canada as well. In certain cases, a treaty could cause you to be seen as a non-resident, but the basic presumption is that an individual is subject to tax if they're working in Canada, even if they're seen as a non-resident. Now, what are some of the common questions that come up? Let me list a few off. So a common one that comes up is, how long can you visit Canada and still be seen as a non-resident? Well, we know that at a minimum there's a 6-month rule or a 183-day concept. So under Canadian domestic law, if an individual is in Canada for more than 183 days, they would be seen as a resident for the full year. However, it is important to look at treaties to determine if the individual is deemed to be a non-resident under a treaty with another country. Another common question is, what if you move to Canada and bring your funds with you or leave them abroad? Will Canada tax them? No, they won't, but what does happen is Canada would tax the income earned on those foreign funds. So if I bring those funds to Canada or leave them abroad, because they were earned while the individual was a non-resident, they're not subject to tax except for any income earned on the funds while a resident of Canada. Will my foreign home be taxed if I become a tax resident of Canada and later sell the home? It could. So again, that's an area that's of common concern. It's important to determine whether that home increases in value after the date of your arrival, because the difference between the selling price and the arrival basis, so the value on the date of your arrival, that difference in value can be subject to tax when you eventually sell it. Another question is, can I claim the principal residence exemption on a Canadian home I live in as a tax resident? You can, but be aware that once you become a non-resident, you won't be able to continue to claim the principal residence exemption for the years you're not a resident of Canada. And there are some complexities in terms of the filing requirements around principal residence exemption and some options and planning around that area of tax. Finally, can I invest my money in Canada as a non-resident? You can, but it's very important that the financial institution that's holding the funds is aware that you're a non-resident, so that the account is registered as held by a non-resident. As well, if you invest as a non-resident, be aware that it's still seen as a secondary tie, so it's important to look at all of your secondary ties to determine whether they're significant enough to cause you to be seen as a tax resident. Now, in conclusion, there are complexities involved, so it's important to seek professional advice. You can locate our information on the website, our website, which is www.trowbridge.ca. We also do a quarterly article for a magazine called Canadians Resident Abroad Magazine. So if you go to cramagazine.com, you can read some of our quarterly articles there. As well, if you do a search on YouTube under Trowbridge Tax, you'll see some other videos that we've posted. You can also email me directly via our website on our Contact Us tab. My email address is listed for Arun, Ernie, Nagratha. You could call me directly at 416-214-7833, and I'm at extension 102. I want to thank you for joining me today just in this very short discussion on tax residency and tax issues for residents and non-residents. Thank you very much for your time.